Welcome to the first video in a series I'm going to be doing. It's going to last however long I want it to be, which is going to be quite a while because we trade every day. But this is going to be just reviewing price action. I trade quarterly theory. I've been doing that for about 8 months now, and I've gotten pretty accustomed to the concepts. And I've been trading ICT for even longer, about 2 years now. And so I just thought, what better way to spend my time than to teach what I know and just, give insight to how I see the market and basically how I take my trades. Because I usually take about 1 to 2, 1 to 3 RR trades, and that has been a consistent win rate for me when I do follow my rules. And, just like many people probably watching, I still struggle a lot as a trader, and a lot of it, most of it, in fact, probably all of it, is just a psychological burden I put upon myself. Waiting for the right time to trade, not trading certain times of the day, and especially not trading Asia. Like, do what you know what you need to do. It's not really that simple. So enough of the yapping. Let's get into the trade of the day. So actually, I do want to start off the Monday. It wasn't known as Monday, so I didn't expect too much, but we did get some movement, and so I do want to explain this. So if I know it's not too clear, but we'll still go over it. So if the quality isn't that good, comment below. I can see if I can make it better because I'm using a bigger monitor and I do have to like convert that to YouTube size, like YouTube video sizes. So anyway, this is our open. I trade QT PO3 reversals essentially is what I'm trading, the micro and the 90-minute. That's essentially the time frame I want to be trading. So if we see right down here, we have our microcycles. I come into morning naming the microcycles what I think is going to be for the day. We have the accumulation right here, so it's expected, not great movement. We have an AMDX, so that means manipulation is occurring during this quarter, distribution during this quarter, or sorry, distribution in this quarter, and then expansion in this quarter. So what I was looking for was a distribution low to what we had our draws, True New York, True Day Open, London low, and also our bullish distribution cycle low. So that is the lowest low of the day that created our distribution cycle SMT. So that would be the sweep that created the DC. And so that was the lowest low I was looking for it to go to because there was lower prices, but it was like 100 points lower. And really this was the rebalance of our range for Asia. So after this, I expected a reversal. That's why I drew this OTE. Right here, I can show my executions because I did enter on paper. I'd enter on paper here because I saw that even though it was an accumulation day, I took it on paper because this is good structure for reversal. We have 5-minute inverse. We have, I think this was our 15 that was supported. We're coming back into 50% of the range. We create another microcycle SMT at 50% CE. This is already rebalanced. So, having a stop down here would be valid. And if I'm going too fast, you just got to keep up. You got to know your concepts well enough to keep up. So with that being said, this did come up all the way to, I think, right here, the 7,800. It came up to the first presenter for value up by close. It was a big wick up during close. But if you had your take profit there, you would have had a very nice trade for that. For the open shorts, it was a little less obvious. I mean, we did have a doubling microcycle SMT with ES, and if you see the quadrants up here, I use this consistently. This is our new daily opening gap quadrants. And just like today, we had an SMT below that. If you want to investigate, actually I can just show. I'll just show right here. See, our new daily opening gap is very important because it's our gap that and this wasn't even correct. I swear that was a bearish candle. But anyway, I use our quadrants to identify that this is the range that we have from regular trading hours. And I use regular trading hours a lot because I noticed that regular trading hours will often continue the movement of previous day's price action. So like here, we've rebalanced probably about 50%, right? There, close to 50%. And we're coming back up, sweep all-time highs, create a new weekly opening gap, tap into this. There's no reason for us to move lower because we've rebalanced and we have a DC in regular or in electronic trading hours, right? So then what am I looking for? Continuations higher. So strictly, like, let's get rid of these executions, actually. Those were the Asia executions that I'm still I'm still making mistakes, and that was honestly so stupid. I lost like $900 and then I had to make Well, I didn't have to, but I made like 2K today, so it balanced out. We're almost past the combine. Let me actually show you about it. So I'm just not going to get rid of the executions so we can, I can talk about the trade of the day. But I mean, if you just look here on the 1 minute, you can see creating SMT at this low. We have a change in character. We have, after these highs got taken, our first presented, I was confident that we were going to reverse. We mitigated true week open, and if you can see right here, we did mitigate Asia sell side. It says right there, but it's my monitor doesn't show it on the full screen. So we did mitigate Asia, and after that, I was looking for a movement up. Usually, I would wait until 10 a.m. to do that because just 9:30 PO3 isn't technically the best to trade because it's just so quick, right? You have 30 minutes. Sure, you can get 2-3R, you can bottom top ticket, but it's happening very quick. And if you want more information, if you want to be in that higher level of precision for trading, then you have to wait for 10 a.m. PO3 because if you just align the microcycles, the 90-minute cycle, and the daily cycle, you can get a sense of, with like good accuracy, reading price action, where manipulation occurs. Like right here, I knew manipulation was this quarter because if it's doing it at the high, it's gonna move lower. If it's doing it at the low, it's gonna move higher. And we have distribution, which ended up being our low, so I thought we were gonna distribute higher. We could move lower from here. Like that's the whole part of intraday trading. It's very hard to get the daily move out of this much data. But like if we start retracing here, coming to OTE, and then respecting this for value gap, probably a 2-minute open, exactly a 2-minute open in the OTE, I would still have my stop trailing right here because like we can 100% a wick down here and do that. And if I'm expecting higher prices, I want to hold that shit, bro. I'm gonna trail stop like right here, 15 points, hold it, probably like right in the lower quadrant right there. Like that's what I would do. That's 100% what I would do, and that's what I had to do for that previous trade, like I said right here, because if it can decide, price tends to come down to 70, like 76 to 78% of a retrace. So like these lows, exactly. And if you have a stop at around 90%, I've noticed that is fairly safe. 90 to like 80, 85 to 90 to 95% is where you want to have your stop if you want to hold for a high time frame retrace, because the whole point of the market is to expand and then retrace to about like 20% to stop everyone else out who isn't in that low risk entry, and then continue higher. I mean, that's what market maker models are designed to do. They're designed to make liquidity and then run in different opposing direction as retail, essentially, in that kind of sense. So I want to talk about one more thing actually while I'm on. I want to talk about the 2-minute, because you can see right here our 2-minute, and actually, you know what, I'm going to talk about this 2-minute first, because the 2-minute is very important. The daily movement is a lot. I mean, if we're looking on the 1-minute, this is a bunch of noise, a bunch of shit I don't want to see. It's like a bunch of these wicks that I don't really care for. But then I go to the 2-minute, and I've been using the 2-minute since I have started to like figure. I can't remember who told me to start using the 2-minute, but the 2-minute just gives you a clear delivery of what's happening with basically half the data. So right here, I'm marking out 2-minute for value gaps. I'm marking out these like 2-minute consolidations. Why am I doing that? Because when I'm looking at price aligned with time, the two things I'm looking at is I'm looking at structure to send us in a direction. I'm looking at what time frame we're trading on, whether it's the 15, the 5-minute we're rebalancing like right here, or the 2-minute that we're just consolidating in accumulation, right? This is accumulation. Like if you line this up, accumulation, manipulation, we're supposed to dump here, and we have this large candle dumping right at like perfect timing. So these microcycles, even these like right here, distribution, what do? We create a breakaway gap almost exactly at that time, right? Distribution here, that was right after we dumped. So the direction is very clear when you align it with AMDX, because it's essentially giving you a time frame, like a fill in the blank basically of what price should look like. Accumulation, we know what that looks like. Well, it's happening right now. It's in distribution. Well, if we're going to distribute and it's going to accumulate, I'm not going to move my stops because it's going to do like shit like that. So I'm going to have set my stop, right? 2-minute inversion, first present, I want to enter above here, stop above one of the highs, usually close to the highest high. Usually close to the highest high, but since it's so far away, this is valid because it's above the first presented, and we're trading in this 2 minutes since we got all the way down here. So this is valid. This was the short, and take profit would be partial at true day open, hold runners to London, and that would be, exit out fully at that low, London low. But 2 minutes is very underrated. Very, very underrated. You can see that it respects it a lot. It gets rid of the noise, right? We have this 2 minute right here that's rejecting. That can be a sign for a PO3 to go short, or we could inverse it and go longer. So comparing that to the 1 minute, like, what do you want to look at? You're waiting for this 1 minute to tap. Well, it can tap up even higher. And are you really going to wait to enter on a short if you're going to short here? Like, no. You want to be certain. That's that 2 minute. We have another 2 minute inversion. Our 10 a.m. Do we have an SMT at this high? Maybe, maybe not. I think we do, actually. It's like very slight. But I'm not trading that. But I'm just telling you how I would read the charts. And that's what you're doing. You're reading the charts. I had all of this. I had every single cycle up and ready for the day. This is essentially how my day went. I go to replay. My cycles are up. I hate how this thing just disappears sometimes. So daily, we have X, accumulation, manipulation, because we ended up taking out a high. This is London high. That is a protected high now. Accumulation, manipulation. If we are going to manipulate, are we going to manipulate high or low? Well, it makes sense that we do both, because we create a high to send us lower, to then send us higher if we are going to be bullish, because we have tight. I want you to think about this. Our new weekly opening gap, all these gaps are tight ranges when they are the best, right? If we have a tight range, then that means we have an area, a smaller area that we're looking to enter on. And if we have a smaller area to enter on, then we can have a better idea of where our stop is going to be and how close to that protected low it's going to be. Because if we're trading inside the range, yeah, it's a little riskier, but you can find great optimal trade entry retracements. But if we're trading the bottom, like the very bottom, where the SMT, like bottom of the day, which that's what it currently is, then you're going to have to be, a little more risk off. So I entered here. I entered after this crack correlation. I put my stop loss at this low, basically right here, because if you can narrow your stop, I do this a lot. If you go down to the second chart, it's usually the 30-second or 15-second. I look for the range, because we're always looking at ranges. I'm looking at the range that I'd like us to retrace to. So I would have my stop, like I said, 90%. If I put it on here, it's going to be a little bit above my stop loss, and that's exactly what I want. So if I put 90%. Right there. Okay, it's at my stop loss. So that would be a safe entry. That's, that mitigates you at least like 12 points of risk. Yeah, close to that, like 10 points. Exactly. That can be a lot. Exactly when you trade 10 contracts, and I was in 10 contracts in this trade, it can be a lot. So what I do, I waited on the 1 minute, 30-second, just watching these ranges. I saw this rebalance, I was holding, saw this rebalance. I exited here at True New York because at this point, I was looking at the 2 minute, it was holding. Next 2 minute is holding. Or we created a new 2 minute. And after that new 2 minute, because it was 10 a.m. and ES had technically this 1 hour right here, which I'm going to show right now. This 1 hour right here that we're rejecting off of, that is why I closed. Because technically we do have a daily TPD. We're looking at our high. We just swept this high. On ES, you can see that we did not sweep that high. So I was bullish, but that was to an extent. That was the bullish trade to optimal trade entry for the possibility that we are going to move lower. But, my bro, come on, load. So some slightly unexpected price action. Curious to see what ES did, because we were creating an SMT with this low on the 2 minute. We were supporting above it, and then we just completely dropped. So still, we were right on our move for the day, and by aligning even the micro and 90-minute, you can still get intraday moves like that. And it's really important to know when you're in a high time frame move, and to, because you want to be ready to take profits out the market. If you're up 2-3 R, bro, you want to be taking profits out. There's no reason to hold for longer because take the profit out and then just wait for a better day and catch a better continuation distribution. We didn't even wait for 10 a.m. So, like, literally, it was likely to get stopped out because 10 a.m. open was here. We manipulated 10 a.m. high. TCSD candle is getting respected, this one right here. And literally just dropped probably through 200 points. So, like just know where to exit. Knowing where to exit will save you a lot of money. And like not don't be greedy about it. Just know where to exit, know where it's likely to reverse because where it's likely to reverse and where you want to exit is the same place. So don't like feel the need to hold and take the risk just to get get a big trade because you could get stopped out. And if you're not at the bottom, like I knew this wasn't a great bottom because of this small SMT. If it just created that, I knew it was likely to come back and get me on the retrace or on some kind of sweep. So that's why I did exit up here because I had enough profit for the day. My target was hit essentially. So that is it. That was today's delivery. Hopefully tomorrow we get some good distribution. I think this day was manipulation because we did have some nice moves. I'm gonna wait, see what happens the rest of the day, and then tomorrow morning, same thing. Mark out your cycles, mark out your triad, true opens, mark out your PO3s, mark out your gaps. That's what you need to do every day, every single day. So that being said, take care, everybody. I will see you in the next trade recap.